managing your 401k like a pro, even if you're just starting out. Hey there, welcome back to the podcast. I hope you're doing great today, because we're diving into something super important: how to manage your money once it's already in your 401k plan. Think of your 401k like a little garden. You've planted some seeds, that's your contributions. But now you need to know how to water them, move them around, and keep an eye on how they grow. This is what managing your 401k is all about. So even if you're hearing all this for the first time, don't worry. I'm gonna break it down, like we're sitting at a coffee shop chatting. Ready? Let's go. So, you've started saving, now what? Once you've started putting money into your 401k, you're not done. That's just step one. Now, you get to manage that money, decide how much to contribute, where to invest, and make changes over time. You can do most of this on your company's benefits website. It's usually a portal where you log in, check your balance, and click around to adjust things. If tech isn't your thing, you can also call the service center representatives, real people who can help walk you through any changes. Here are the 3 main things you, or someone helping you, can do. Change how much you're contributing from your paycheck. Change where future contributions go, like which funds they're invested in. Move your existing balance, kind of like rearranging the furniture in your room. Here's a cool fact. You can make these changes based on your plan's valuation cycle. Let me explain that. A valuation cycle is just a fancy term for how often your 401k gets updated with gains, losses, contributions, and so on. Most plans do this daily, but some do it weekly, semi-monthly, or even monthly. So if you make a change before the stock market closes, usually by 4 p.m. Eastern Time, your account gets updated that same night. Your balance reflects the latest fund prices. It's like getting your garden watered with the freshest water. There are a few behind-the-scenes folks making sure your 401k works the way it should. The trustee. This is the person or company in charge of investing the money, tracking it, and paying it out when the time comes. The plan administrator. Usually your employer or someone they hire. They make sure the rules are followed and that you get helpful info, like a summary plan description or SPD. That's a document that explains everything about your plan, in plain English. Some companies even offer educational tools to help you choose the right investments. If yours does, use them. They're super helpful. Now let's talk about checking in on your account. You can usually do this on the benefits website, by calling a service center, or through printed or emailed quarterly statements. And what can you see? Your current balance, how much you've contributed, how your investments are doing over time, gains and losses for specific time periods, a performance summary for each fund. This helps you see if your money is growing, staying steady, or going down. Let's get real. Your 401k balance isn't going to be a straight line going up, and that's totally normal. Why? Because the stock market fluctuates. It goes up and down based on the economy, interest rates, global news, and even emotions. Yes, investor fear and excitement move markets. That's why it's so important to diversify, which is just a smart word for don't put all your eggs in one basket. Imagine if you put all your money in tech stocks and suddenly the tech market crashes. Not fun. But if you had some in tech, some in bonds, and some in international stocks, you'd be more protected. That's the power of spreading out your risk. Just keep in mind, diversification helps reduce big losses, but it doesn't mean you'll never lose money, and it doesn't guarantee profits. Let's talk about what really helps your 401k grow over time. Contributions. The more you put in, the more fuel your account has to grow. Investment performance. How well your funds are doing. Time invested. The longer your money stays in, the more it compounds, avoiding withdrawals. Taking money out early can seriously slow down your growth. What's this rate of return thing? Good question. Rate of return is a number that tells you how much your investment went up or down over a certain period, usually as a percentage. You'll see returns shown like this: 1 month, last quarter, year to date, 1 year, 3 years, 5 years, since the fund started, called inception to date. But here's a heads up. Past returns don't guarantee future results. Just because a fund did well last year doesn't mean it'll keep doing great. That's why it's smart to look at long-term trends and not obsess over short-term dips. Wrapping it up, take control of your 401k. Let's recap what you now know about managing your 401k. You can adjust your contributions and investments anytime your account gets updated based on your plan's valuation cycle, often daily. You have tools and people to help, like websites, SPDs, and service reps. Keep an eye on your performance, but don't panic over ups and downs. Diversify to protect your money. Focus on the long game. It's a marathon, not a sprint. Next time, we'll talk about rebalancing. what it means, why it matters, and how to do it without stress. Until then, keep checking in on your money. Ask questions, learn a little every week. And remember, you're doing something amazing by taking control of your financial future. Catch you in the next episode.